It's Friday, March 19th. This is The Street Live. I'm Catherine Ross, and the market's in the red right now. What are you watching?
Okay, I'm just watching the 10-year because it really doesn't matter anymore. It's just 10-year, 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 10-year. Now, the 10-year interest rates were actually down this morning, and then the Fed changed some rules about banks, and immediately anything that the Fed says right now is viewed as being bad, inflationary, sell bonds. So they did, even though this one really shouldn't necessarily have made you sell bonds. And then, so interest rates went higher, reversed everything, and now what we're seeing is interest rates cooling for a second. Even just like 1 second of cooling brings money to the NASDAQ. There's a call, one of my friends who's just really a great fan of TheStreet, Tony Dwyer, came out with what I thought was the smartest piece of the week, if not the month, which says enough of the financials. The financials are really no longer representative of great value here. And I've been feeling like that. I mean, we sold some Goldman Sachs. Yesterday we sold some Wells Fargo. I mean, because it's just gotten ridiculous. So that's what I'm watching, the 10-year, 10-year, 10-year. And by the way, just so you know, when the 10-year goes up in price, and therefore we go, interest rates go down, it's bad for a lot of the industrials. Why? Because there's this algorithmic linkage which just says, wait a second, if rates are going down, then perhaps what's happening is business is not accelerating, so sell Caterpillar. We sold some Honeywell yesterday, so we made some very good sales, and instead we're plowing it into some other names we can talk about in the action alerts video.
Before we get there, Jim, I'm looking at GameStop right now. It's down about 6% to 188 a share. What do you make of this stock here?
It's been so disappointing since the last quarter. We bought some yesterday. Why? Well, there's a very good revaluation piece about Grand Theft Auto. I think that they're absolutely going to have a terrific year, but doesn't mean a thing. Why? Because it is viewed as a closing trade as opposed to a reopening trade. It's viewed as a work from home, play at home, live at home, whatever you want to call it. And so therefore, it doesn't matter what we think. I just say, you know what? That's nonsense. At 210, maybe that's the case. At 160, with a slate that is really, that matters tremendously, with all these new boxes that we know are powered by these incredible NVIDIA chips, which I've gone out and seen myself when I visited NVIDIA, and Jensen Huang showed me around. But Jensen has described to me the wonders of what's going to be happening, and it is just nuts that people keep selling the stock. So we felt like we should buy some. But I don't know. We left plenty of room. We sold so much.
And Jim, just because these two stocks are trading near the same levels, you're talking about Take Two. You bought Take Two for your Action Alerts Plus portfolio,
Yes.
Correct?
Yes.
So I was watching Mad Money last night, Jim.
We have news here about Dow Jones. We have news that the DOJ is going after Visa. We have MasterCard, and I don't want people to panic until we know more. Jeff and Zeb working on it right now. So don't panic on MasterCard. They're going after Visa, not MasterCard. We'll know more. So don't panic, okay? That just broke that news.
And that's what I love about this show, Jim, is that you and I, when people notice that you're looking down at the screen, you're watching the news come in. You're watching these stocks as we're talking about them in real time.
Yeah, I find it so often that people have to recognize that you can be an actor and pretend, or you can actually try to give an analysis of the news on the fly. And one of the things that I think is really important is, let's say you're covering a sporting event. Well, if something happens in a sporting event, whatever narrative you were going with may be wrong. And I'm going to be willing to switch up and say, wait a second, Visa just got nailed by DOJ. And I can't therefore presume, and then MasterCard goes down 10 points. I got to find out what's going on. I can't just act as if it's not happening. So yes, thank you.
And I want to circle back to Mad Money last night, because I think that what you were talking about actually really impacts this market right here. You were pondering whether or not investors should be worried about inflation, but you don't think so.
No, because what I did was I broke down, it was on Real Money too. I broke down all the different parts of inflation that are bothering people. And there is, in every single case we can tick down. Let's say lumber, you're talking about Lennar. Well, we have, President Trump, former President Trump, put tariffs on Canadian lumber. And those tariffs have to come off because it's costing America a fortune. And the President Biden has to call Trudeau and say, look, let's figure out something. Let's get a deal going here. We want more of your lumber because the Canadians own our big sawmills too. So it's ridiculous. I mean, this is a failed Trump policy. We got to figure out how to undo it right now. Chemicals. Well, with the chemicals, can we just understand that this Superstorm Uri knocked out the whole chemical plastic complex, and it's not that easy to rebuild. And so there's 30 to 60% of the chemicals are offline, but they'll get online. If they'll get online, that's what people do. I mean, it isn't like they sit there and just say, oh, geez, we're offline. No, I mean, they're working 24/7 to get back online. When you see copper go up, I mean, people say there's not enough copper. Well, hello, have they heard about Peru? Have they heard about Chile? Copper's an international product. When people say, wait a second, there are real issues involving oil. Well, it's like oil just dropped 10%. I mean, well, you're like going to say this, there's no issue. So I took them one by one. I urge people to read my Real Money piece. And I think what you'll see is that it can be transitory, and these commodity prices could collapse very easily. They could collapse, and then Powell would have raised rates for nothing. He's a
Jim,
smart man.
Out of curiosity, I get a lot of friends texting me because they're just getting into this market this year, and they're not quite sure, what's driving what. And one of the things, I mean, they see these articles about inflation concerns, which, you're not saying that we should be concerned about that yet. What else is concerning you in the market? What should my friends be concerned about?
Well, remember, these people don't link bonds. I mean, they didn't go to Goldman Sachs and be taught that you got to know about what the bellwether, which was at that point the 20-year, 30-year. We had a lot of different. We used to look 30-year all the time. That we were taught about the linkage first. I mean, when you get to Goldman as you're an associate, and I know that because it's in people's minds because of the news stories. But what you did was you learned not about stocks, learned about treasuries, then you learned about corporates, and then you learned about stuff. Stocks were an afterthought, and I think that that's not the way younger people trade. I mean, younger people look at Twilio and they say, oh, geez, that powers Lyft. That's kind of interesting. Or they look at Okta and they say, geez, look at this Okta. That's literally, that's your identity. It's your passport to the new world. And that's business to business, but they know Okta. My daughter knows Okta. So you get into a world where they know the company, very Buffett-like, by the way, know the company, and just think that the company's well run. Now you can say, well, look, some of them don't know jack and they're just gambling, whatever. I'm not going to denigrate this group. I think this group is really a learning, thinking group and knows how to Google, knows how to do research. So they are people who, frankly, are no longer to be denigrated and no longer to be ignored. Now they do. There's a cohort, a subset, that is involved with GameStop, and I think that when you look at Wall Street bets, it's still almost always GameStop, which is, it's just really sucks the air out of everything because there's so many other stocks. But next week, GameStop reports, and they report after the market on March 23rd. Today is March 19th, so this is gonna be Judgment Day. And will Ryan Cohen do one of the following? Now, this is that insurgent who joined the board. He's got 15%. One, will he suggest that the GameStop get the pieces of big malls where the JCPenney's are closing and create game palaces? Now that there's no latency. Thank you, Zev, for this. Zev FEMA. Game palaces where what'll happen is that they can do worldwide tournaments, perhaps paying with Bitcoin. That's one. Second, will they become the dispensary and the knowledge base of crypto, all crypto, and sell you the NVIDIA cards that you need for Ethereum? How will they relate themselves to Bitcoin? Can they become another source of great analysis of Bitcoin? What can they do in terms of making it so that they are, because Ryan is Chewy, making it so that they are more digitized? And the way they would do that is they become more like a PayPal. They become the game part of the PayPal wallet. There's so much they can do, but I really think it's time for them to put the cards on the table. And I think it's scaring people when the stock's down 10. But I wouldn't be scared if I believed in Ron Cohn.
Jim, a piece of exciting news that we got yesterday was that Amazon has now won the right to carry Thursday night NFL games starting in 2023 for 10 years.
Right. Well, I mean, those are crummy games. I know it doesn't matter because they're still NFL games. Ratings are bad for those. And they're bad because the players are too tired, and they'll tell you that over and over again. Their bodies just aren't ready. So Amazon got these crummy games, but if you do fantasy like bull market fantasy, or if you bet like DraftKings, then I have a relationship with DraftKings, then I think what you would say is, well, okay, I'll watch Amazon for a crummy game on a Thursday because I have to. It's good to see them in there. They boosted the price for everybody. The winner was the NFL, and the NFL is the only product that seems to be, when there's a game, people watch it to conclusion. Again, that's because of gambling, and there'll be inter-game gambling soon, and it's because of fantasy. So it's a valuable contract because of fantasy. And I know people, and gambling, I know people may not agree with that, but that's because they're less informed than I am.
Well, and you could also argue that it's a valuable contract in terms of seeing.
Well, I'm trying to. You can challenge that. I mean, I think.
I completely agree with you, Jim. But I'm looking at, just from what I'm looking at when I'm looking at this story, is also the fact that we're seeing the NFL kind of go digital. It's been one of the sports that has really stayed cable for so much longer than any other sport, in my opinion, at least. I don't know if there's numbers to back that up, but it's interesting.
Remember, all the companies, all the people who bid for it are digital. I mean, they have to amortize it. If they don't get more people on their digital, then that's the hope for them. Because cable. Look, we're in a cord cutting society. And the cord cutting is accelerating. And now Comcast stock, because I work for them, is doing well. Why? Because they're high speed, and you need the highest speed imaginable. I love my Comcast. Why? That kind of.
Well, and I think to your point, Jim, when you see the Thursday night games going to Amazon, but the rest of the games on various other streaming services, it makes you wonder, you're already paying so much money to see the NFL during seasons that unless you're really into fantasy, or you're really into betting, are you going to pay the extra money?
I think a lot of people were into fantasy and gambling. It's state by state. It's happening. As it grows, NFL audience is going to grow further. And I think that it was brilliant that it was necessity. You had to get this contract. You had to, because when gambling becomes nationwide, no one's going to watch anything against these companies. I mean, if they put the NFL on Wednesday night at 11 p.m., it would have to be watched because of gambling. So it's a win-win Gambling is the driver here, and I think the networks really know that.
So I want to switch lanes here and focus in on some earnings. First of all, there's FedEx, and they posted strong earnings and a robust end-of-year outlook. Do you think that FedEx is a buy here?
Yeah, definitely. I mean, it's only at 14 points. This was a breakout quarter because Express Ground did really well. We're getting some very good international news. I mean, and e-commerce just continues. I mean, yesterday I recommended Williams-Sonoma during this broadcast. I said, listen, it's up 17. I don't care. Well, it's since then, it's up another 20, and actually 25. And that's because, I mean, all anybody knows, it's really important for people to recognize, e-com is now finally a very profitable business for FedEx, very profitable business for UPS. People should stop selling UPS. Every time it gets to 164, a seller comes out. And it feels very much like the seller at CVS at 59, then the seller at CVS at 63. Totally, that seller finished. The seller of UPS has to finish before that stock can go higher. Now, just so you know, why do I mention this? Because the worst trade I've made for Action Alert was selling Viacom. And that was because there was a seller, an endless seller, 16, 18, 16, 18, millions and millions of shares. And the seller was wrong, wore me down. and there's a seller of United Parcel, 164. That person's going to be dead wrong. But until then, they seem to try to make themselves right.
So for those of you unaware, last night, Jim, you sat down with Josh Silverman, CEO of Etsy, for the 92nd Street Why. Tell us a little bit about that interview.
Well, first, Josh is a pretty brilliant guy. And the stock's up 10, but that's right. I think it's up 10 because of the interview. The interview was incredibly impressive. Josh was top of game. He's always top of game. And what he talked about, one of the things he talked about was how really the machine learning there is amazing. The AI is incredible. And they saw in April, suddenly everyone was asking for masks. And they're trying to figure out, well, wait a sec, this isn't Halloween. What's going on? And they realized, well, holy cow, that people are selling masks on Etsy. And they very quickly pivoted and made that into a major business. And it's a reminder that Etsy is a topical, business-oriented, woman-dominated empowerment company that has changed the world. So many people have been laid off and suddenly developed a business in Etsy. Business on Etsy doesn't cost, it costs very little money. And I mean, I use Etsy as daily. As someone who runs restaurants, as someone who's trying to get presents, it's remarkable. And I would urge people, and there's a link in my Twitter feed. I would urge people to watch this because you're going to find out why Etsy could double here without a problem. I'm talking double. Yes, 220 goes to 440. There is a moat around this thing that almost no one has, and don't anyone dare tell me that that Amazon can crash it. Because if they haven't crashed it yet, they ain't going to crash it. It's an international community of people. It's a return to the days before the Industrial Revolution destroyed so many people's creativity. It is just terrific. And Josh laid out the story in multiple ways why you should own the stock of Etsy.
All right, and Jim, our final topic of the day is Nike. I'm going to restrict you to a buy, sell, or hold on Nike after earnings because I really want to dig into this name specifically on Action Alerts Plus on our daily rundown show, which we'll go to right after this. So, Jim, buy, sell, hold Nike after earnings.
Well, remember I said don't buy it yesterday. I said it on this show. I said do not buy Nike. If you haven't bought it, don't buy it. So the answer is buy it because now it's down.
All right, come join us over on Action Alerts Plus Daily Rundown Show on actionalertsplus.com. I'm Catherine Ross, and we hope that you have a lovely weekend.